as we see it, in the context of this big concept of sustainability, we have a rather narrow window, it seems, of opportunity to take the needed decisions to alter the trajectory of what has become generally accepted, and that is climate change. We have this opportunity to create a new engine for sustainable prosperity while preventing the worst consequences, seemingly, of a warming world. Importantly is how then is capital allocated towards supporting this, what I've called a mega shift, the mega trend of our time, effectively. This is crucial, and this trend has been labeled sustainable finance. So how do corporates and companies embrace, or how do corporates, companies, countries even, in the case of the UAE, embrace this? And will sustainable financing, embracing of sustainable financing for corporates and countries be a competitive advantage going forward? That's sort of a question. How do we create sustainable financing, which is increasingly the trend, of course, but how does it become a source and a driver of competitive advantage? I'll give each of our panelists 3 or 4 minutes just to introduce the topic as they see it. What are the priorities? What are the opportunities? What are the trends and challenges? And then we'll go into a group conversation. Okay. Lord Barker of Battle in the UK, Greg Barker, is also the co-chair of the Carbon Pricing Leadership Coalition, a very important initiative. Greg, from your side, is your observations on sustainable financing? What are your key sort of thoughts around this, and ultimately how's the global economy, even considering dramatic events of recent weeks and knock-on effect on energy markets? How will carbon be priced going forward? Just a general leading question. Thank you.
Sure. Thank you very much indeed, and great to be here in Dubai. We are at a very critical point. 2022 has not turned out to be the year that many of us thought it would be, far from it. And it's giving rise to some very, very clear choices for people driving investment, for people making finance decisions, for businesses looking at their whole future business model. The energy crisis is also giving rise to some unexpected decisions and some good opportunities, but also in climate terms, what could be some big financial opportunities, but they could turn out to be very bad for the planet and for the climate agenda. But in terms of sustainable finance, green finance, the fact of the matter is there's been a massive increase in that overall new asset class just in the last couple of years. And if you may, I'll just give you a couple of figures to give some sort of context to that. Sustainable investments have now, according to BlackRock's Larry Fink, reached around $4 trillion. That's approximately the GDP of Germany, or twice the GDP of Brazil or Italy. And the money held in sustainable mutual funds and ESG-focused exchange-traded funds rose by more than 50% last year to 2.7 trillion. And globally, the asset management industry made over $1.8 billion just in fees last year from sustainable funds. And then if you look at the debt markets, sustainable debt has soared, with issuance exceeding $1.6 trillion in 2021, bringing the total market now to over 4 trillion since inception. And we're seeing those numbers grow almost exponentially. So the bottom line is there are no shortage of funds in search of sustainable projects. To my mind, the real challenge is to find the projects, to find the deals, to find the investments that actually offer a really attractive rate of return for all of this money. Because the bottom line, although a lot of this is nominally ring-fenced within ESG or green or climate funds, very few fund managers are compromising on the returns that they will be looking for. Very few banks will compromise on the interest that they will charge. You have seen, at the margin, Green funds getting an edge now, which is great considering they used to be more expensive to raise green money. But fundamentally, to my mind, it comes down to the projects. And the big challenge of 2022 that none of us were expecting, certainly not last year when I was in Glasgow for the climate summit, and there was increasing optimism there that the momentum to act on climate change was passing from governments, from big state actors to the private sector, to private sector initiatives. And now we're confronted with the energy crisis, which is seeing the oil price, to take the best indicator of the carbon economy, to well north of $100. Racing up now to the point where some of the big oil companies, the big oil majors that, and even the coal producers that just a few months ago were being written into history, are now really wondering whether to recommit to big multi-billion-dollar exploration and development programs to give a second wind to fossil fuels. And so what is the answer to this? We're not going to be able in the current geopolitics just to push down the oil price or the gas price and change the economics of those. What we have to have is a carbon price. Ta-da, you knew I'd get there eventually. And I would say that, wouldn't I? But only 23% of the global economy is covered by a carbon price currently. And if we are serious about translating to a low carbon economy, then we need a carbon price factored in right the way across the world's major economies as soon as possible, or we're not simply going to see the progress in the private sector that we need to see in order to keep global warming below 2 degrees, never mind keep alive 1.5. And perhaps in the rest of the discussion, I might come on to how we might do that and what the barriers are and why carbon pricing, which has been around for years, if not decades, hasn't really had the take-up, and why I believe in this decade it might just get that pull-through that it needs.
Great, thank you. Alex Stevens is your founder and CEO of Greenomy. If I can just, don't want to direct your opening comments too much, but just picking up what Greg said, there seemed to be a very short time period here, post-COP26, as you spoke about, Glasgow, to sometime late Feb and the energy shock that the world is currently experiencing that Greg set out. Has oil and gas had, as Greg said, its second wind in light of recent events? And what will this impact be, if that's the case, for sustainable financing in the power sector in particular going forward? Sorry, Alex, maybe I'm being too prescriptive here, but just a thought.
We're speaking of sustainability, so short-termism doesn't matter. We're looking at the long term. What's important is that many major economies in the world have pledged for carbon neutrality by 2050, 2060, depending on the country. And we have 30 to 40 years to get to that stage. Now, it's been estimated $130 trillion will be necessary to make the transition. And that financing will not only come from the public sector, but also from the private sector. Now, we're speaking here of sustainable finance, considering it's a subset of financing. Actually, financing in general should become sustainable per se. And as it's becoming more and more mainstream, as we're seeing, then transition will happen. Now, you've mentioned it's not a shortage of funding, it's potentially a shortage of projects, it's a shortage of capacity to assess, make the due diligence of determining what is sustainable or not. What we see now appearing is more and more disclosure requirements from issuers, from asset managers, credit institutions, and what's called ESG or green taxonomies. So basically classification systems of activities, and according to screening criteria, key KPIs to determine what is sustainable or not. Now, these are thousands of data points and legislation that constantly evolve. We have it in Europe, we have it in many other countries adopting their own taxonomies, such as here in the UAE with the Sustainable Finance Working Group that is aiming to push forward a UAE taxonomy for COP28 that will be hosted here in the UAE. And what will be key here is to create this interoperability between frameworks across the world, because ESG, green capital markets, should be able to finance projects all across the world, not specific assets and not specific market participants. So we're seeing a big shift. We're seeing governments pushing for more standardization, but at the same time, I think, and as the CEO of a tech company, digitization is important to make sure that this transition can happen as fast as possible.
Right. Alex, thank you. Pierroberto, Alex said, what is sustainable, what is not? And a word I learned in relatively recent times is this word greenwashing. With all the number of different regulations and overlapping regulations and lack of uniformity across, what are the trends and what are your observations around what is compliant, what could be accused? How do you define what is greenwashing, and how do we differentiate what is substantive and what is superficial?
Oh, thank you, Martyn, for the invitation and also for the question. I would say, first of all, let me totally agree with the other colleagues that the problem is not to find money. The problem is to find employable projects in which you can employ capital. It's a no-brainer today. But let me tell you one more thing. What is missing is also entrepreneurship. Because yes, it is true that there are a lot of capitals around, but capital arrives when the project is there. What is missing is development money. So money that you're ready to risk. And everyone is happy to put the last euro, the last dollars, but nobody is happy to put on the table the first euro, the first dollar. So let me say, we should call for entrepreneurship. And we are, for example, evolving our business model in order to become co-developer. So to get along with the technology, get along with clients when the piece of paper is blank, in order for them to take the courage and co-risk when you are in the developing phase. And this is to me, I'm going this way to answer your question, because I believe the greatest answer to greenwashing is to put skin in the game. So when you work on greening your story, you are communicating. When you become entrepreneur, for sure you are not going for the window dressing. If you are risking your own money, it means that you believe that is your future. So put the spell of entrepreneurship, to me, is the best way to filter greenwashing exercises. And what to do in order to help projects to develop. Because again, when a project is there, the finance will come. But in the meantime, what to do? First of all, it's very important, I totally agree with you, to have some monetary cost attached to CO2 emissions. So to help business cases, to help feasibility studies, it's very important that the developer can not only rely on revenues, but can rely also on the avoided cost of CO2 emissions. So any regulation that is creating certainty on the fact that in the business plan, CO2 emissions will become a monetary cost, the more it happens, the more you will help developers to put skin in the game. So regulation is the first real, tangible invitation to invest as developers and co-developers. And then this is the big framework. Getting into the latest developments, you know that in Europe there has been a huge debate around gas. If gas was expected to be taxonomy compliant or not. There was a massive confrontation among Germans, French. I don't know how much Middle East is somehow curious about that. But for sure, with the big turmoil in the Russian gas, I believe that gas will become, again, fashionable. And if gas is going to become fashionable again, it's very important that these new gas developments are born with the right CO2 footprint, with the right carbon capture technology attached, with the famous business case on what to do with CO2 once you have sequestrated it. So for sure, the Russian story will push what we call the blue projects, meaning blue projects, those projects in which CO2 is captured and possibly utilized. Blue projects will be more fashionable than before. Green projects will have to be there. Let me give the last comment. Yes, this turmoil on geopolitics is elevating the oil and gas prices, but typically, let's see the good part of the story. For sure, the higher is the price, the more new technologies will be comfortable. The more new technologies will have space. So if we are getting in front a world in which gas will be fashionable again, for geopolitical reason, first of all, let's procure that the CO2 story is truly and stringent, so that these new projects are born with CO2 sequestrated. And two, let's procure that this space in the alternative technologies can be leveraged in order to procure that in this period, alternative to hydrocarbons have more, I would say, comfort in terms of financial returns from time to time.
So Pierroberto, is a second wind for oil and gas, but more sustainable technologies employing that. That's sort of the headline for Europe going forward.
Sure. So,
Alex, you mentioned digitization. Let me link the two. So digitization and seeking better regulation. What's the relationship between the two, and how does digitization support potentially the issue of sustainable financing and regulation thereof?
Well, referring to your previous question on greenwashing, one of the causes of greenwashing is, first of all, the lack of ESG data.
Correct.
Of accurate, reliable data. And so now, since you have these taxonomies standardizing how you measure sustainability, it also will reduce the potential of greenwashing. Now, digitization is important because we're speaking here of thousands of criteria, data points. In the EU taxonomy alone, there's 2,500 data points. And so by codifying those screening criteria and creating a step-by-step process to help issuers and generate their taxonomy scores for equity or debt issuances, you can help them structure all the data that will then be used by asset managers and credit institutions. And on the other side, credit institutions, asset managers having thousands of holdings or loans also have to capture the data, collect it, aggregate it, and generate their own reports. But the question here is not only about reporting and compliance. The idea is to use the reported data to go along the transition path of the taxonomy, so spending more time on analyzing rather than reporting. And so data analytics technologies can also help all players assess the reported data and know year on year how to improve their sustainability. And we've been speaking about setting a carbon price to increase the cost for all players. I believe that what's most important is the higher you'll have as an ESG score, the higher taxonomy score, the lower your cost of capital. So corporates will take into account their sustainability level because otherwise the access to financing will be more and more difficult. And so if you can project how much a sustainability improvement will have on your lowering of cost of capital, CFOs directly will now push the decisions rather than heads of sustainability within big corporates. And as managers, banks are all pushing the sustainability agenda forward.
Alex, bearing that in mind, and great question to you is, I currently live in South Africa. A lot of regional projects in our part of the world, as Alex alludes to, are not being financed because of high carbon content, be it coal projects, be it oil and gas projects, and particularly the same discussion is pretty much happening, arguably, in this part of the world as well. We hear phrases like just transition of countries shifting from one energy high carbon economy to a low carbon economy on a more sustainable basis. And again, this is being pushed by financiers often, will reward sustainable projects and punish those which are not. How do you balance the interests here of countries, and this is a very politically contentious debate, of countries in different, arguably different stages of development and certainly of very different power mixes from a carbon perspective? What do financiers, banks, asset managers, what do they do here? And how do you balance these very different agendas?
Sure. Bottom line, you can't rely on the market to deliver all of your social goods. And there is absolutely the overriding social good, the social imperative of economic development for the global south, for the world's poorest people are absolutely entitled to the same quality of life that others around the globe have. And it certainly should not be disadvantaged from efforts to fight climate change. So that's why the just transition is more than just a glib phrase. It actually represents something very fundamental on the climate agenda. Now, the key for economic development is not having a huge resource of carbon fuel to draw on. It's about having cheap energy. So if you can have cheap energy, typically that is where economic, or certainly industrial economic activity migrates to. And if you can get cheap energy, then the rest ought to fall into place. So it's really about making these renewable energy projects a reality. As Pierroberto said, there is a problem in that everyone wants to queue up to be the last dollar into the project. No shortage of that. It's really the development stage where there is still, particularly in Africa, particularly in the global south, where there's still a shortage. I saw that when, some years ago when I was the climate minister under David Cameron. This would be a perennial problem in Africa in particular. And part of the reason is in the rush to grow the total cake of available funding for development projects in Africa post Copenhagen in 2009, the climate conference in Copenhagen, there was a fashionable trend to merging public and private finance into one pot. Let's raise a new fund and we'll match every dollar that the private sector puts in with a dollar of public finance. Sounds good in principle, but in practice what that meant was you pushed up the returns that public sector dollars were looking for to match those that the private sector were looking for. And as a result, there was nobody there to take that first loss, to take the biggest risk. And that is the space that needs to be reoccupied and expanded by public sector finance that private sector finance never really will do. So we need to have a big shake-up of the international financing institutions. We need to pull them together and make people understand that there will be some first loss, which means actually losing some money. Not every project is going to get across the line. And if you have that sort of wake up and smell the coffee and be prepared to lose some money, and that's going to come from the public sector, then I think you will get a lot more private money coming in behind. And that's what we need to see, a big shake-up of the way that projects are financed in South Africa, are going to cross the rest of Africa and the global south. But it's not happening fast enough, and I don't see real signs that we're shifting the model quickly.
Mm-hmm. Pierroberto, maybe the sort of stereotypical glib comment perhaps is one of, and I don't agree with it, but I want you to expand and define it for me, please, is sustainability versus profitability. And I think the challenge many sort of CEOs and particularly have right now is saying, well, how do you sustain shareholder support and interest when the return on investment on many of these long-term type sustainable projects is over horizon and perhaps even beyond the tenure of that particular CEO? How would you sort of
it's a fantastic
get into that conversation?
You are picking up the story from this point. I would say there are two kinds of projects. One project is a project like, again, you are emitting CO2 and therefore you, again, we call it white certificate. The cost per ton is well set. For example, in Europe at 80, 90 euro per ton, your CO2 capture investment will be paid back. And so this becomes sustainable economically to the extent, let's call it the CO2 tax is there. So those projects will be absolutely fly once the CO2 tax reaches and remains credibly at a level that is repaying the investment. And this is not innovation. It is a kind of reaction of the existing emitters in order to lower the carbon intensity in their existing productions. And this is, I would say, very complicated and very simple at the same time. You have to set a kind of CO2 tax or a carbon cost that is monetary and therefore is repaying the relevant investment. Then there are other kind of sustainable projects that are innovative. That is, for example, the chemical recycling in circular economy, a new kind of plastics starting from sugars to be in the bioplastic, green fertilizers. So how to substitute the molecules we know. And you know that petchem is not only in the fuels, but the deep petchem is even in the textile, So how you procure that there is a kind of decarbonization of molecules. Again, I totally take your point. If you don't have renewable energy, you're talking about nothing. But if you have renewable energy at the beginning of the story, there are a lot of processes that can be decarbonized. And on these new technologies, again, the role of entrepreneurship is very important. The role of regulation is very important. The role of finance is very important. And profitability of those projects it's a matter of entrepreneurship. So when you start today, you have to believe. That's the definition of being entrepreneurial. To see and to have a vision that is not crystal clear to everyone. Otherwise, there will be not innovation there. So the culture of innovation, the culture of entrepreneurship means to start working even if, everything is not written in the stone. So this is the kind of entrepreneurship that we are looking for. This is what is going to create long-term value, but you need to jump. That's a kind of leap of faith you have to go for. And to do it, you need entrepreneurship. What's the role of the public sector in kicking in this kind of entrepreneurial spirit? What we are experiencing is the concept of grants. Because with the concept of grant, automatically you will somehow help an innovative project which will not attract ordinary investors, because I totally take your point. Even green investors, they are looking for covenants if it is debt, they are looking for returns, rightly, if it is equity. So with the instrument of grants, obviously, you are somehow helping the equity of the initiative and you are enhancing the IRR of the initiative. So I would say we need strong entrepreneurs and we need very, I would say, knowledgeable regulators, but we need also the public money not to be like a rain everywhere, but they have to be channeled on the few projects which will have to be ranked, evaluated, and then will be strongly helped with grants. So that's, to me, the way to turn also more entrepreneurial projects into attractive one and therefore profitable and sustainable economically also.
Pierroberto, can you give any specific examples right now, be it in Europe, your home context, or this region perhaps? But it will be, what's the word? Catalytic in terms of supporting the agenda?
And I can make the example of chemical recycling, for example. The circular economy is there. It's a concept that is there. In particular,
the what economy?
Circular economy.
Circular, right.
Sorry for the Italian English. The more you go south, the more.
I thought you just invented a new word that I'm constantly introduced in the whole green economy to new things that are popping up.
No. There is a lot already invented. Now it's time to transform into reality. So exactly. I don't want to be fancy this afternoon. So again, circular economy, in particular, chemical recycling of plastic, is becoming increasingly important. So if you want to understand if a country is rich or poor, let's look into the garbage. Our garbage is full of dry waste, it's full of plastic. So we have to manage it with mechanical recycling, but we have also to treat them chemically. So there is a lot of innovation around chemical recycling of plastic, and there are a lot of innovation funds that are here and there. So I believe that is the mechanism to procure that sustainable projects are not a pilot, are not something for newspapers and TV programs, but becomes an industry. So becomes industrial scale, with feedstocks, with off-takers, with industrial engine inside. So this is a very good example of innovation.
Thank you. I've got one last question before I'm going to open it up to the audience. So the question is to Alex, and coming back to this, what I'm seeing sort of a, what's the word, tension perhaps, at a CEO level or even a board level, thinking about this is around competition versus collaboration. So is it alone or together? This is, climate action can bring, as Roberto's saying, as Greg was saying, clearly competitive advantage for an organization. But how do we shape a course of a movement that by its very nature requires collaborative action? And so you're sort of a first mover or you're a fast follower, and how do you, from an IP perspective, how do boards, decision makers in organizations start to think about the pursuit of sustainable businesses, as Pierroberto set out, profitable, sustainable businesses, where moving first is not always perhaps the easiest step to take?
I'm a big supporter of collective intelligence, because that's the best way of getting the best ideas and implement them and making major changes.
If I interrupt, Alex, is there any any industrial examples you can think of now where an industry as a whole is thinking these issues through and actively pursuing it as an industry rather than an individual actor?
I can give you an example in my sector, financial market infrastructures, with Euroclear. The idea is it's not only issuers, asset managers, credit institutions in their corners, everyone has to work together. And so we have realized ourselves as a tech company, climate change is affecting all of us. We're all on the same boat. So one thing is to be naturally competitive, but what we realize is in this sector, players are ready to partner up and work together, at least at this stage. And of course, at some point, you'll have some leaders taking the lead and they'll push forward. It's all about creating an alliance of the different players that are here today and making sure that everyone can contribute towards implementing that transition together. Now, at board level, indeed, when you're looking at sustainability innovations, you may have governments providing grants, you may have venture capitalists helping new startups, tech companies create sustainable businesses. But corporate VC is also very important. Corporates know that they have to reduce their CO2 emissions, become more sustainable. They know exactly what are the business streams that need to be transformed. And so it is also about scouting the right projects, supporting them financially with shared IP and commercial partnerships before potentially aiming for strategic partnerships and acquisitions of these startups and making them mainstream. We see sandboxing from regulators, pushing forward new innovations, not regulating, not licensing them. And we see also more and more corporate VC in the sector of clean tech, green tech. So a lot is happening. The key is about coordination across regions, because we're all affected and we have to make sure that capital is allocated across the planet to all players. And then also all the ideas, all the inventions, all the IP is also shared so that we can all push forward together.
If I may, just any questions at all? Anyone have a hand up for any questions or pose a point?
Just one question. Which opportunities do you see here in the region for investing in sustainability and in the energy transition as well? Middle East and Gulf region.
Who wants to take that?
Well, it is happening. I mean, the solar revolution that's going on here is really amazing. Just about, I think it's only about 3 or 4 miles away, you've got Emirates Global Aluminium putting in, I think, 3 gigawatts of solar in order to decarbonize aluminium in a sector that I've been heavily involved in, that historically very polluting, but actually a metal that's going to be vital for the transition. And to switch from gas to gas solar hybrid is really important. But we need a lot more of that, gigawatts and gigawatts. And I think the government here, I was in Dubai for the Sustainability Summit in January, where they announced a ambition of 200 gigawatts of solar globally. I was a bit worried because I thought that was going to pave over the entire UAE, but that's the portfolio that will include global destinations as well. So solar is the most obvious, but other renewables as well, but also using the wealth of the region to switch to renewables and other sources and take some risk. As we were saying, you've got to take risk. You're not going to build an exciting tomorrow without taking risk, and maybe that's the biggest challenge. Embrace those new technologies.
There's a gentleman in the front. I think there was a question.
Yes, John Peckett with Abe Global Securities Exchange. I was speaking with a pal last week who's runs a $1 trillion USD plus commodities position for a global G50 bank. And he reflected to me when I was asking about carbon trading that he would consider it a breach of fiduciary duty for any member of his portfolio management staff to touch carbon credits, given their history of deep fraud and, frankly, criminal behavior. Is there any potential that you see for rescuing the reputation of carbon credit trading and making that a unit of trust that all major portfolio managers would like to be able to have that work and function?
Well, I think if you made that a criteria for dealing in any sort of asset class, no one would touch dollars. I mean, how much fraud has been perpetuated in dollars, or how much fraud has been undertaken in pounds sterling or any other currency? If you find any sort of currency, the new people will find ways to commit criminal acts. I know what you mean about the need to tighten regulation, but as we heard earlier, that is happening, and the more disclosure, greater standardization, more common metrics, digitization is going to really make huge leaps forward. But I think that sounds slightly backward rather than forward-looking view to posit.
Alex, you talk about regulation coordination. What is the role of stock exchanges in this regulatory environment?
Well,
and can you name which would be arguably more progressive in this space?
I'll remain neutral, but stock exchanges, of course, are the first point of contact for issuers, and they can impose on issuers specific reporting disclosure requirements. And so by imposing such disclosure requirements and collecting that data, they can then feed it to the investors that can make their own assessments. So stock exchanges are the first step, the first part of the infrastructure. And what we see here in the region is the UAE is increasingly becoming the regional hub for sustainable financing. Soon, with the launch of the UAE taxonomy, that role will increase, and more financing, more of the wealth in this region will be able to be allocated to sustainable projects all across. So indeed, it's not only stock exchanges, it's all market infrastructure, it's all players that have to work together.
Not a leading question at all, but it is this, as said, this is a country's comparative strategic advantage in terms of creating this enabling environment for sustainable finance. Which countries, please name, would you think would be leading the way here and creating a good platform upon which private capital, the regulatory environment's enabling, and private capital, entrepreneurial capital, can truly take advantage of it in a correct, compliant manner?
Well, we do see that in Europe, having published the first taxonomy, is inspiring other countries. About 25 countries across the world are adopting their own taxonomies. But of course, there is no better or worse taxonomy. Everyone has their own requirements and specificities locally. The key is to remain neutral, but also create interoperability across these frameworks and matching the different fields so you can ensure that you have international sustainable finance markets.
Was that clear coming out of your last conference you had here? Was it here or AD in January? Was this what the countries, the Emirates, are seeking to do?
Yeah, but I think the key point is that there's no one global solution. I think one of the, learnings, to use that terrible word, of the last decade is that different economies need to have the flexibility to adopt programs that are right for them. So, a global price on carbon doesn't mean one price. It's going to mean different prices on carbon depending on the economy. Likewise with regulations, and I think having that flexibility but the same goal is very important for policymakers.
Gentlemen, we've come almost to the end. I'm going to give you each, maybe start with you, Alex, and I'll work our way down to Greg. Pierroberto in the middle. Your conclusion going forward. Big question, big field, of course, sustainable finance. What do you want to see? What do you hope to see happen? What's your ideal sort of highlight, if you will, going forward, short to medium term, to conclude?
The key goal is to create an international ESG, sustainable finance market infrastructure. And so to get there, you need taxonomies across the world that are interoperable, and you need technology. You need to digitalize. And so by having such an infrastructure, you can make sure that funds go towards the most sustainable projects and get to that transition, making sure that in the next 30 years, by 2050, 2060, depending on the countries, we reach that net zero economy.
Sorry, Alex, to press you. Sorry to sort of direct slightly, but give me a time frame on this. How long do you think this is realizable? How long will it take to have that uniform taxonomy realizable? How long?
We see already 25 countries now across the world adopting their own taxonomies. The idea is to have the whole 200 countries. I'm sure in the next 5 years we'll see significant progress, but with technology we'll get there even faster.
Fantastic, thank you. Pierroberto.
But I believe once again that it's time to step up and get out of the comfort zone. In the traditional business, everybody is in its own vertical and is not necessarily feeling that all the variables are there for him to jump. So I think it will be the time for enablers and time for orchestrators of this change. So I believe that new kind of operator will have to build from scratch or transforming the existence, connecting dots. So to have this process happen, you need to connect dots. So you need to have jumping from the comfort zone and connecting different industries in a different way. There will be capital, but you will need this kind of new entrepreneurship, because without this new entrepreneurship, there is no regulation that it's enough, and there is never private capital enough, unless there is someone that is connecting these dots and seeing and realizing a vision.
Pierroberto, thank you. Greg, last word.
Well, I think I take from what both the previous speakers have said, there is fundamental market failure in the climate change agenda. And as exciting as it is to see billions and billions each year being added to the sustainable finance market and the growth in green finance, that alone is not going to be the subject. We do need strong policy guidance. And we also need near-term goals, not just a 2050 or a 2060 goal. Because if we're going to keep climate change, global warming below 2 degrees and keep ideally below 1.5, then we have to make progress in this decade. It can't be enough just to have a 2050 goal. We've got to actually bend the curve in this decade. So this year, next year, year after, is really critical in the whole battle against man-made climate change, which is why I am worried about the oil and gas industry getting a second wind. I am worried that this will prolong the life of projects that maybe just 12 months ago were due to be shuttered or turned down, and why it's really critically important that we don't allow the latest, geopolitical developments to detract us from the absolute imperative of fighting climate change.
Greg, gentlemen, fantastic. Thank you very much. We're 1 minute over. Sorry to keep you. To use your words to conclude, we must be enablers, we must be regulators, entrepreneurs, and orchestrators. Pierroberto, let's make that change. Thank you all very much for your time. Much appreciated. Thank you.
Thank you. Thank you.